To follow is a quick overview of data relating to the Central Coast residential rental property market. This includes data on vacancy rates, the impact of short-term rentals on supply and demand, the impact of low building approval rates, and the early signs of impact this is starting to have on residents and communities. We've been monitoring the short-term rental market for a while and started to notice a significant reduction in residential vacancies across the coast, as seen from comments on Facebook from people struggling to find rental homes and worrying about having to pull their kids from school and so on. Residential vacancy rates have been going down for the past few months since COVID and are now mostly at under 1%. Yet we've got Airbnb occupancy rates which are under 50% and in some cases under 25%. Some suburbs have got more than 10% of available properties listed as Airbnbs, and yet there's very few residential rental properties available. Residential vacancy rates across the coast, you can see, have consistently been dropping over the last few months, in fact, most of this year. And the other interesting fact about this is that many of these suburbs have over 30% renters. There's a few examples that I'll show. First of all, Gosford, we can see, is down below 1%. It's got over 30% of renters, and rent as a percent of income is just under 26%. If we come to Yamina area, postcode 2257, we can see again the available vacancies is below 1%. There's only 37 vacancies in that postal area, and the rent as percent of income is over 30%, which is seen as an indicator of unaffordability. The percent of renters is over 30% as well. So again, we've got challenges in that area. In the Warring area, 2259, the vacancy rate is 0.7%. There's only 48 residential vacancies available in that market. And then if we go and look up to 2263, we can see in the Gorican Lake Haven, Chelmhaven area, we've got under 0.5%, only 15 residential vacancies, vacancy rate 0.4%. Rent as a percent of income is 31.6%. So it's quite clear to see the impact that the proximity to Sydney plus the oversupply of Airbnbs is having on the residential property market. If we compare the Airbnb percent of dwellings, so calculated based on the percent of properties that are listed on Airbnb as a proportion of the dwellings in each suburb area against the residential vacancy rate, again, we can see which areas have been the hardest hit. So some suburbs, the short-term rental occupancy rate is below 25%, and yet they've got less than 1% of residential vacancies. We can see in certain areas, particularly down the south end of the Central Coast, Hardy's Bay, Kilcare, Pearl Beach, we're up over 15% of the properties are actually now listed as Airbnbs, and yet there's very few places available to rent for long-term rentals. Looking at the demand side of the market, we can see this is data showing the number of listing visits for properties that are listed are for sale or rent on the market. We can see that the demand is very high. So in some suburbs, the demand is over 2,000 visits per property as people are looking at properties to rent. The high demand areas actually look to be coinciding with suburbs that have a high proportion of families with children. So it seems as if those are the suburbs that are most hit at the moment by this massive increase in demand, plus the unregulated nature of the Airbnb, the short-term rental market, which is now causing many of these properties to not be available to families with children. Now, if we look at the residential dwelling approvals data, which is traditionally been very low for the Central Coast, one of the lowest in Australia for the rate of residential dwelling approvals. We also happen to have the highest number of homeless or at risk in New South Wales of any LGA. So we've got this combined low rate of construction, high rate of existing homelessness, and now we're going to be adding to that this massive shortage of properties and excessive demand on available rental properties in the market. So I think it's sort of a perfect storm in terms of the rental property market as we look at it today. If we drill into homelessness, we can see the areas that are hardest hit. It's currently highest in Gosford, Wyong, and the Entrance, but it looks as if in some of these other areas we're going to start to see an increase. In fact, Central Coast LGA is one of the only LGAs that is seeing a consistent trend of increase in homelessness. Most other LGAs have actually seen this trend in reverse, that they're actually reducing it, but it's actually increasing. And this data is only up until the end of 2019. So when we look at the data for 2020, when the impact of COVID and the impact of Airbnbs and proximity to Sydney, we're likely to see an increase on those numbers as well. If we look at the population trend now, historically we've had a fairly low rate of population growth, only at 0.9% compound growth. If we compare it to other smart city regions such as Geelong and Sunshine Coast, we can see it's quite low. So our population trend is low, even with the demand that we're seeing for properties. If we look at the forecast based on current growth, we're way off target to meet the 2036 goal. So if there was a desire to achieve the stated strategic goal in terms of the population target, that is only going to increase the issues of homelessness, lack of buildings being constructed, and the demand on the local property market. This is just a drill down on the residential building approvals data. As you can see, that we would need to be targeting 183, I've estimated, per month to be approved in order to meet our strategic target. And the numbers are actually way below that. In fact, they're declining year over year, so that the rate is reducing, not increasing as it needs to be. So hopefully that gives some interesting insights into the property market as it stands today.